So this is what we refer to as. Can you guys hear me?
Yes, we can hear you.
Can you hear me?
Yeah.
Yeah, we can hear you.
All right, sharp. So basically, this is what we refer to as what? As imbalance. Now you're going to see the difference between these two structures or these two diagrams I'm drawing right now. All right. So looking at this candlestick right here, you're going to notice that this candle wick is not touching any candle wick. It's not touching this candle wick right here. So now the space between this candle wick and this candle wick right here is what we refer to as what? Imbalance, right? The space between here, from this candlestick wick and this candlestick wick, this space right here from here to here is what we refer to as what? Imbalance, this space right here. Okay, that's what we call what? The imbalance. But now if you look at this pattern right here, you're going to notice that this candle wick and this candle wick right here, they are mitigated. Then this candle wick right here and this candle wick right here, they are mitigated. So let's just go straight to the chart. I think that will give us a clear indication of what we are talking about imbalance. Okay, guys. So look at this structure right here. Okay. Now you see this candle wick right here and this candle wick right here. This red candle right here, the wick, this is it right here. And the next candle right here, this is the wick. So now as you can see, we have what? Imbalance there. So the imbalance right now is this space between this wick, red candle wick and this green candle wick right here. So this space right here is what we refer to as what? Imbalance. All right, so I'm going to show you guys more example. Now let me still show you. Somebody's annotation is on. Somebody's annotation is on. Please just remove it. So yeah, so if we're talking about where there is no imbalance now, what we expected of the market, what we always expect the market to do is that the candlestick wicks is supposed to be meeting each other, right? That's just what we mean by what? Efficiency. But now, another name for this imbalance is referred to as pricing efficiency, right? But when we are talking about efficient price action, it simply means when candlesticks are meeting each other, right? An example is this. See this candlestick right here? I can see this what? This other candlestick right here. This one right here. This green one right here. You can see it's mitigated the previous what? Week. Right here. But if you look at this side right here, you're going to see that this candle wick, then the upper candle wick, which is this one here, did not even come down to mitigate it. So now the space between these two is what we refer to as what? Imbalance. So the space from here to here is what we refer to as what? Imbalance. All right. I hope that's saying straight, right? So the imbalance thing is not really a big thing, right? So basically, anytime you're looking for entries in the market, let's say you have like 1 minute time frame entry. Let me go to 1 minute time frame, for instance. If you come down to 1 minute time frame and you're looking for entry, right? We always tend to focus on these imbalances as we want to use them as what? Decision making in the market. Now, see an example here. See this candle wick right here. I see this candle wick. This is the wick right here. And then where's the next candle? This next candle is the green candle. Where's the wick? This is the wick right here. So now you're going to see now that the space from here all the way to this point is what we call what? Imbalance. This space, this whole space right here, this is what we call imbalance. So we always expect the market to come back later, and fill up what this imbalance. Once it fills up this imbalance, we now expect it to tap into this as an order block and to buy from there. Okay. Now, mind you, sometimes market just fill up imbalance and it will just move. An example of that is what happened here. You can see instead of price to leave this pricing efficiency or imbalance here, you can see it went all the way up as it came down to fill up that imbalance. As you can see, price tapped into the imbalance. Now, when it comes to imbalance, we always expect market to fill up that imbalance at least 50%, especially when it leaves this imbalance that is big as this. We expect the market to fill up 50% of this what? Inefficiency or imbalance. Now, how do you know it's 50%? If you use your fib, so if you use your fib right here, from this swing low to this swing high here, you're going to see that the 50% is somewhere here. 50% of the fib, this is it, right here. And that's exactly where market what came down to. After filling it up, it went up. Right. So basically, you always expect markets to fill up at least 50% of what pricing efficiency before it moves further. I hope you guys understand the inefficiency thing. Here's another one. This red candle wick right here. Now, where's the third candle? This is the second candle. This is the third candle. So on this third candle, we're expecting this third candle wick to be mitigating the what? This first candle wick. You can see where the third candle wick is. So this is what we now call what? Pricing efficiency. So the space from this point right here to this area here is referred to as what? Imbalance. All right. In case you hear imbalance, 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 we always want price to feel imbalance, this, that, blah, blah, blah. That's exactly what we are talking about. Right? Is anybody still confused about what imbalance is? Anybody still confused about what imbalance is? It's something simple. If my explanation of it is not that straight, let me know. Send me find a better way to explain. You said no. You don't, do you get it or you don't get it? Which one? If you understand what imbalance is, just tell me say I understand. If you don't, just tell me I don't understand. Right? It's easier for me to identify if you do or not. All right, all right, all right, great. So any other person? Any other person? So basically, I want us to actually reflect on the trade I took. Are you just focusing on the imbalance? I'm not just focusing on the imbalance. I'm just showing you what imbalance is. Because basically, you need imbalance when making trade decision. All right, we need to see price what show us imbalance. Not really like every time, but you still see the need of the imbalance we are talking about. You still see the need of price what imbalance or inefficiency. So I'm trying to download this plugin so I can share my full screen. I don't know, my network is so slow. Okay. So in the absence of that, this is just so delayed. Let me just show you guys the trade entries I went on today, starting from the Euro AUD trade. All right, so let's get on to Euro AUD and let me show you guys the trade I took on Euro AUD. I think that should be this guy. And see, market is still dropping. I think it pulled up. I don't know who made this annotation on my screen. I don't know who made this annotation on the screen. Please just try and remove it. You can try to remove it, please. I'm going to have to clear this thing. Sorry, it's good. I've done that. Can you use the red pipe like the Silcho? So please, how do I know a single family order block? Can I see like how do I identify really confused? Now, single founder order block, we've not even gotten to that extent. Serial, yeah? We've not even gotten to the extent of single candle OB. That's an entry type, right? That's an entry type. It's still coming to that. I'm just trying to just focus on the basics, right? Because if you skip these basics, right, you're going to find it hard adapting to the strategy later. Just focus on the basics now that I'm showing you. All right. So coming to the trade I took on Euro AUD yesterday. All right. Coming to the trade I took on Euro AUD yesterday. Let me just show you guys how that entry came about. So basically, this was how the entry came about. Can you use the red candle to explain, please? Is it the imbalance? You don't understand the imbalance, Victor.
Yes, the red one.
Victor, do you understand the imbalance so I can proceed? All right, you said I should use the red candle to tell you what the imbalance is. Now, it's still the same thing. Now, this is an imbalance right here. Imbalance is referred to as pricing efficiency, right? We always expect candlesticks weights to be meeting each other. We always expect them to be meeting each other. Now, look at this right here. This is a red candle, right? And now this is the wick of that red candle here. This is where it stops. Now, this second candle in the middle, that's not what we are looking at. We are looking at the third candle that will form, right? So the third candle that will form, we're expecting it to at least be tapping on the line, same as this first wick right here. If it's not tapping there, as you can see right here, it's not even up to that line that I marked. So that means this is where the wick stops. So for that reason, the space in between this candle and this candle here, this space right here, this small space you're seeing, is what we call the imbalance. Now, if you take a look by your left, you're going to see that market came to fill up that imbalance. I hope you can see. Price came back to fill up that imbalance right there. This is the imbalance I'm referring to. This space from here to here. Price came back to fill up that imbalance before moving. All right. So imbalance is the space between two candlesticks. All right. So now let me give you all this one right here. You can see this candle and this candle, they are efficient. Right. So there's efficiency here. This candle wick and this candle wick means they are meeting each other. So let's see this candle wick, which is this one here. So I won't count it. So let's say this one here now, this candle wick right here, and this third candle wick, are they meeting? No, they are not meeting. So we have something like this. So now the space between these two candles right here is what we call the imbalance. I hope you're seeing it. So let's check another one. So see this candle right here? This is it. This is the wick. And what's the third candle here? This candle here. So basically, the wick or the space rather between here to here is what we call what? Imbalance. I see that we have a lot of imbalance right here, but you can see that price went up to fill up now. Price passing through this imbalance is called what? Filling it up. Price went all the way up to fill up the last, like the only imbalance remaining here, which is this one here. Price went all the way up. Since the price went all the way up to fill up every single imbalance sitting on this leg before price what? Moved down. Is that clear, Victor?
Yeah.
All right. So please, I don't want to leave anybody out. If you're not understanding, like at any point I'm explaining and you're not understanding, just let me know. All right, just let me know. I'll take my time and get back to that. Okay. So now coming back to my trade, I took on what's it called? I took on this Euro AUD yesterday. So let me put my price. I think back. What was that? So the back right here. I think so. Right here. Was it here? Let me see. It was somewhere here. Yeah. Please pardon me. My network is very bad. Okay, guys. So coming back to this trade now, let me take my this thing back so you can see where I took my entry from. Right here. Okay, guys. So basically, right, yesterday on this Euro AUD, after price gave a break of structure right here, this is a BOS, right? After price gave that break of structure, now I was looking out for what? First of all, I was looking for inducements, right? I was looking out for price what? Inducements. And what did I see? I was looking out for price inducement. So where can we see inducement right here? Now, the first place I can see inducement is this guy right here. This is my IDM. So after I spotted out this inducement here, now the next thing in my mind was, okay, fine, where is the inefficiency or where do we have price inefficiency? Where can we sell from? That was my question that I asked myself. So of course, you know that selling has, as you can see, selling has to do with the unmitigated zone within this leg right here. So I think I was not here when the market was around this point. But when I was there, this was something I marked, I think something like this, yeah. I marked out
Inducement.
this that I wanted to sell from there. So what I had. So my own point was just to wait for a single candle order block what? Mitigation or single candle OB. I will explain the inducement tomorrow. That's when we'll do the recap. I can't go back to you right now. That's when we'll do the recap. So basically, right now, I was waiting for this area here for me to get back to entry for sale, right? And I'm targeting this lead. So I was waiting for a single candle OB since that's the entry model that I use. So let's see what price we do. Fine, we'll have an entry model right here. As you can see, price was close below this candlestick right here. As price closed below, now I can decide to sell the market straight from this angle here. I can decide to sell the market straight from here and have my SL just above the high, right? Which is something like this. So let's see. Which you can see that price was dropped as I expected. But this was not the trade I wanted to go into. Now, this is just to tell you or show you that, oh yeah, the single candle will be worked for me in this angle, right? But this was not my entry. My entry was somewhere around here. So basically, I came into this market somewhere around that area. But now the reason why I personally went into this trade was because this is the last lower high standing, right? And I remember what I told you guys yesterday. If market sweeps a lower high, I explained the difference between a sweep and a close above, right? A close above means that once market closes above this lower high here, then that means we have a valid change of character. But if price does not close above it and then taps into that high and sweeps below, that's closes below, then that's a liquidity sweep. All right, so we are bound to go short from there. So let's see what the market did that yesterday that made me to enter Euro AV, I mean. So let's see. So you can see price what swept that high right there. This is the candle that swept the high, right? That's my single candle OB. So what I wanted to see was, I want to see price what close below this SCOB right here. So you can see another candle still sweep above. So as another candle sweeps above right now, this power of this what previous SCOB transfers to the new one that swept the high. So now all I'm looking for is for market to close below this guy. So let's see. So I see no candle close above yet. Below, I mean. So I see series of consolidation. Now, if you notice, all these candlesticks are forming. Price is forming all these candlesticks, and none of them is closing above this high. All of them just keeps closing below, keeps closing below. That's an indication that market wants to move down. So all you need to do right here is just wait for an SCOB to what completely form, right? So SCOB is just more like the highest candle to take out the liquidity here, or the highest candle to form right here. Wait for a close of that candle below, then you sell directly. So let's see. Fine. As you guys can see, this is the highest candle right here sitting. that price was swept. As you can see, market closed below that candle, the green candle right there. The red candle closed below the SCOB. So giving us an indication right here. So what I did was I went down to the 1 minute time frame because yeah, you can decide to sell from this whole zone here. You can decide to use this whole candlestick right here as your what? Your entry. But me, like I told you guys, it has a disadvantage and advantage. Disadvantage of selling from this directly from the OB is that you're likely to get a lesser risk reward. But if you want to get an increased risk reward, all you need to do is go down to 1 minute time frame. And that was what I did. So when you go down to 1 minute time frame, you're likely to see an unmitigated what? Block right there. So what's the unmitigated block we have here? We have this guy sitting. This was the unmitigated block. And this was actually where I put my entry from. I was expecting market to do what? Sell from there. So let's get back to the 15 minutes. Okay. Go back to the M15. My stop loss was, I think that was about, I can't remember, but around somewhere 5, 6 or thereabout. So let's see. And now, and this trade entry was around midnight. I think it was around 11, 12, thereabout. That time the spread was too much. So I think I gave my market a little bit of space because of that spread thing. So this you can see that area I marked on the 1 minute time frame got mitigated. And of course, where is my target? I targeted the inducement, right? Where's the inducement? This is the inducement right here. I targeted that loop. And this was where I had my SL on. Basically, I had about 6 RR, not up to 7. So that means I have more SL. I had about 6 RR trades. So let's see something like this. I have about 6 RR there. I think it was 8 pips stop loss. I can't remember. So here is how the market played. As you can see, price started dropping. Now, this was the part that got me scared. When market did something like this, I was already in the trade. My market dropped down, rejected again. So I was like, does it mean that market wants to pull up? But I still had my trade, and this was what market did. I woke up to my TP being smashed. So I saw markets what smash my TP, giving me, because I reached 1% on this, it gave me $600 on a 10K account. So the next trade I want to actually look you guys up to is the odd USD. So let me look at the odd USD. Just have 6 minutes left. AUD USD. AUD USD. I think this almost starts. So same thing happened right here, guys. Same thing, that same concept that I just showed you guys. That's what I'm trying to use on this was past CHF. Right? So that's the same concept I'm trying to use. As you can see, this is the single candle OB that swept the high. If you watch right here from 15 minutes time, this is the last high standing. Our market went all the way up, swept that high, the candle closed below. Now, I wanted the market to come back to this what SCOB right here. I want to sell directly from this, right? Because the stop loss is not that much. If you check. So look at this. If I sell directly from this CHF right here, this is what I will have. I should be having around 6 pips stop loss. And of course, I'll be targeting what? An inducement, which is likely to be this guy. Or probably this blue right here, which will give me around 6 RR. So let's go to that odd USD trade I was talking about. So the AUD USD trade, it took me off guard because basically I was looking at everything here was mitigated. Everything sitting right here was mitigated. So the guy I was looking at was this one here. But one thing I love about this strategy is the fact that if the market does not show you a reaction, you don't act. Because yeah, me marking out this zone does not mean I'll just start selling from it. I needed to see a 15 minutes candle was single candle OB, a rejection there, and a close below. So this is a confirmation that helped me to have maybe, if I was there at this particular time, this would have helped me what avoid this loss from here. So as you can see, price just kept on selling and buying and buying and buying. Where is price going to? That was the question. So when you see something like this, and I know that this last high was the standing high, whereby if market takes out this high, the next thing is what a change of character. Okay, if market should grab this high right here, that means we're going to have a change of character. So basically, I was just there paying attention. So me seeing the market starting to reject from this candle week right here, I was just watching it closely because I know I already have a change of character to the downside. So at any point in time, we are expecting price to withdraw. I really missed this trade and it really paid me, right? Because I showed you guys yesterday that, oh yeah, see, on USD that we are anticipating something here, all right? So basically, once market tapped into this extreme point right here, which is the last lower high standing, what did market do? We had a candle, the green candle right here. It's closed below, right? As it closed below, we are now expecting a candle towards close below it. But what can we see? The red candle right here did not close below this green candle. Rather, it wicked it out. So once market wicks out a previous candle, then the power transfers to this one. So this red candle now is the power candle right here. So all we need to see was to see a candle close below the wick, and then we confirm our single candle open. Now, seeing that, right, you can see that market. Let me take this back. So you can see this is something that we'll have. So once I saw this, now I had it in mind that, okay, price already gave us what our SCOB, which is this red candle right here. Since our other candle closed below, so we have our SCOB, which is this guy right here. Now, like I said, you can directly sell from the SCOB, or once you have that break and close, go to 1 minute time frame and look for an unmitigated zone. So coming down to this 1 minute time frame, do you have any unmitigated zone? We have this guy right here. This is the guy we have. Any other unmitigated zone? If you can see any, yeah, I can see this guy. But this is okay. This whole guy right here. Fine. So these are the unmitigated zones that we have. All right. So now price already created inducement for this zone. What's the inducement here? This pullback right here. So confirming that, yeah, I can sell from this guy. And even there's no inducement here, I would have gone for the extreme. So this is an IDM. So basically, I would love to have sold from here if I was directly there when this thing was happening. So my stops should just be right somewhere around here. Let's see. This thing should be. All right, so we got tapped in. So once we got tapped in, go to M15. So once you go to the 15 minutes time frame, you target the what? The low. Where's the low? This is the low here. Right, target the low, and you can see that's 11 hour straight. Now, if you are put 1% of this, definitely you're going home with 11%. Right, you can see on USD throughout today, it's sold massively. Boom, TP hit. Right, would have hit this 11 hour right here, smashed it. Right, this is it. Or even went to as high as 14, but of course, you have to stay to your game, which is 11 hour. And I think I have another trade entry. So there were many of them, NZD card, right? This is another trade entry on NZD card. Single candle OB mitigation, right here. Boom. Market hit TP, 6 hour. I have another one to show you. That's EUCH. Yep, EUCH. Yeah. Check out this guy right here. Okay, this is Euro USD. I was actually anticipating a buy on Euro USD later in the day, but my first buy was here, which after price took out this higher low here, we confirmed the change of character. So let me show you the Euro CHF trade right here. Exactly, this is it. All right. So yeah, I'm sorry, like if you guys are not really getting the whole thing here, don't really rush it. Of course, tomorrow we're going to have a complete recap from the pullback settings to currently where we are right now, and you guys are going to understand how everything works. I'll try as much as I can to just shorten the whole course thing. I'll dive into entry model soon, right? That will be like the next upper video we're going to do. After tomorrow, the next video will be entry model. All right. So peace, guys, and thank you for joining, and have a wonderful night.